from Friday, December 13th, 2024. We took a trade on the S&P 500 futures, December 2024 contract. We're looking at the 15-minute chart, and then we'll jump onto the 1 minute for more details on the entry. Let's just jump right into it. Looking over here, buy side liquidity prior to 8:30, represented by this red dotted line. Price sweeps buy side liquidity resting above these relative equal highs, and then price starts to show signs of willingness to go, that it wants to go down, seeking liquidity resting below here, and it goes further down to take out liquidity resting below these relative equal lows. So we don't take a trade up here. Price impulsively moves to the downside, creates this 15-minute breakaway fair value gap, this 15-minute SIBI. We wait for price to see if price would trade back into it. It doesn't. So price keeps going, trading down, showing strong willingness that it wants to trade lower. Forms the second 15-minute SIBI. Again, we wait for price to trade back into it, and in fact does after sweeping the sell side liquidity resting below these relative equal lows. So basically, from buy side liquidity sweep sell side liquidity, and now from going to internal range, and that is inefficiency. So we waited for price to go back into this 15-minute SIBI, tap into it, show clear rejection as it did right here, closes way down here with this long wick. And the minute we start seeing that rejection, we jump onto the 1 minute chart for our entry. So this is basically the same move on the lower time frame. That's the 15-minute SIBI that was created after price swept sell side liquidity resting below these lows. So it was expected that price would trade back into it and show some kind of rejection, and that's exactly what it did. We enter here halfway through, actually at the second candle, outside the 15-minute SIBI. There's also, if you see here, there's a 1 minute SIBI, but we didn't even wait for that. Once we saw this clear rejection, we entered. Price came down, forms this 1 minute SIBI, trades back into it, taps into the 15-minute SIBI again, and price eventually trades down, displaces down, forms another 1 minute fair value gap, bearish fair value gap, trades back into it, taps into it multiple times, and then eventually trades down to the next low. So basically this was a reversal continuation trade. Since we didn't take any trade up here, we could have, but we didn't. And this was basically, I would say, maybe the last leg, which we took this opportunity and took a really nice trade. One contract on the S&P 500 futures. It's around $529 or $530 in total. Hope you find this useful. Should you have any questions or comments, please do leave them down below. Consider subscribing and hit the like button. Till next time, take care.